if I look at your competitor, you refer to them as competitors. They like to be targeted. They like to be precious metal focused, or they like to be South America, North America focused. They're trying to think of what their investors want. You don't have that. You are geographically agnostic. It sounds like you're now commodity agnostic, right? So I'm trying to work out how you position yourself in the market and why people are paying attention, because they are, because your share price says they are.
So Matthew, you touched upon something very important right there. You said that my competitors are focusing on what they think the market wants, and they are. We don't do that. We focus on what we know will accrete value for EMX shareholders long term, and that's acquiring really smart folks, engaging them, and building value within this space through the acquisition of prospective mineral rights and converting that into royalties.
But it comes back to the point. So you think you're going to lead rather than follow, and that's your differentiator. Yep. So why do you look at other royalty companies? I think the only thing you've got in common with royalty companies are the word royalty in the name, isn't it?
Well, royalties are phenomenal financial instruments, and I can't begrudge any company for paying dearly to acquire them. And I shouldn't sound like I'm trying to begrudge my competitors. They just approach it in a different way. But royalties are fantastic because of the embedded optionality. And when we acquire a piece of prospective mineral rights, Matthew, I'll give you an example. We tend to do two types of organic deals. One is we acquire some prospective mineral rights. We sell it off to an incipient public junior company in exchange for shares, maybe some small but escalating cash annual payments. Always a work commitment to get money spent in the ground. That's where the value is created, and a production royalty on the end. Now we have the optionality of being able to accumulate that annual cash flow pre-production, also be able to play that share position that we have in the company to the advantage of EMX. We have a great track record of making money off of our share positions in the history of the company, those shares which have been paid to us part and parcel to our deal flow. Whilst we're waiting for that optionality that's most important, which is discovery optionality, to happen on our portfolio. And there's multiple examples deep in the portfolio of discovery optionality coming through to fruition. And it's a really fun business.
Yeah, it's certainly interesting. It took me a while to decipher what was going on, I think, because you need to fill the hopper, right? Because your value curve is different from a traditional royalty company, in that you've got a lot of stuff going on at the ground level. You need to kind of really fill that hopper, and you need to be doing a lot of deals, which take a little bit longer to come through. But over the time frame, you think that's what your best. That's your best model. That's the best model for you.
Yeah. So, one good cash flowing royalty that emanates from our organic portfolio will pay for all the money we've ever spent. Yeah, and that one's coming in Balya. Balya is already cash flowing as a production royalty to us. It's about to ramp up into full scale commercial production, becoming a multi-million-dollar cash flowing royalty per annum, with a really long mine life. And they continue to find more high-grade lead, zinc, silver. This is in northwestern Turkey, 5,000 ton per day mill. We're very, very, very pleased with how that property is coming along. It's a great one to point to as just one project that has paid for the entire creation of the whole portfolio.
So what I'm trying to work out is, where's the inflection point come? Okay, because you do have this weight of lower value projects sitting there in the portfolio, but it's going to take time. I was trying to work out how would I work out what your cash flow looked like, and I think it's a tough one for me, because I think when it comes, it's really going to pop, but I need the company to give me some clues as to when that inflection point is.
Yeah, so we're right on the steps of it. And so people coming in to become shareholders today have the benefit of 17 years of building this portfolio. And we have a number of royalties that are ramping up or coming into production within the next few years, plus strategic investments that will be yielding dividends over the course of the next few years and be a cash cow by 2023. People are starting to understand that and realize the discount that we are trading to that incipient cash flow.